Hello and welcome. This is a free webinar of the International Society of Automation in association with the Control System Integrators Association. The title is Risk Management and Risk Transfer, Important Considerations for Independent Contractors and Control System Integrators, How Insurance Can Help. And the reason and impetus for today's program is because the ISA and CSIA have launched a new initiative to enable its U.S. members to obtain the insurance coverage that they need and their subcontractors need. The program is called Insurance Solutions for Automation Professionals, and it's designed to ensure that members can obtain very broad coverage for their general and professional errors and omissions coverage at competitive premiums. And we'll go into what that program is all about in a moment later in today's program, but we have a distinguished panel that present person not included, who is going to discuss the need for the program and how it can help the members of these two organizations protect their assets and potential liabilities. Let me just remind you that you can ask questions at any time, but I would ask that you use the Q&A box at the bottom right of your webinar screen, not the chat box, the Q&A box, and we will be monitoring your questions as we go and asking questions to our panelists. So let's introduce our panel now. I'm the one at the top, Mark Voigtman. I'm an attorney, a partner in the law firm of Faegre Baker Daniels. I lead its automation practice. We are located in the United States, China, and Europe. I've had a long association with the CSIA and automation providers throughout the North American region, and I've authored a book published by the ISA entitled The Automation Legal Reference, a guide to legal risk in the automation, robotics, and process industries. So I'll be your moderator, and our panelists include Dennis Brandl. He's president of BR&L Consulting. He's chief consultant for that organization, specializing in manufacturing, IT, and flexible manufacturing solutions. He's been involved in MES, batch control, and automation system design and implementation in a wide range of applications over the past 30 years, including testing relating to the space shuttle, automated systems for chemical plants and oil refineries, and manual and automated systems for pharmaceutical and food and beverage production. He's an active member of the ISA 88 Batch Control System Committee, as well as ISA 95 and the ISA 99 committees, and he writes a regular column for Control Engineering magazine. Don Roberts, top right, he is president of Exotech LLC. He's been involved with system integration since the late 70s, including owning a large SI company. And as a consultant and principal at Exotech, Don gets to work with companies from around the world. He works directly with owners and senior management of hundreds of SI companies, facilitating their strategic planning and executive coaching. And he's also one of the guys with the CSIA who audits CSIA members who want to become certified, which is a special certification that has considerable market value out there in the automation world. And we have Charlie Gifford with a lot of titles, Senior Advanced Manufacturing Consultant for 21st Century Manufacturing Solutions. For the past 30 years, he's been involved in more than $60 million worth of projects. He's designed advanced manufacturing plants and intelligent systems across 12 different industries. And as a TQM facilitator and process action team leader for more than 25 years. Charlie has worked in over 70 plants, 14 years of that with the U.S. Navy as an end user, 4 years for GE as a software vendor, 5 years for SIs, and 7 years for his own consulting firm. He's written 5 books, 50 papers. Sounds like an automation subject matter machine. His team leadership combines continuous improvement practices with operations management systems and lots of hands-on process and system design. And he's quite a contributor with the ISA, OAG, the Supply Chain Council, and MESA. And he has contributed and taught many of today's automation standards. We'll be hearing later from Paul Bernard. He is the insurance program manager for CSIA, and he's the key guy for the new ISA initiative. He started his insurance career at Lloyd's of London in 1966, which accounts for his British accent. He worked in the claims department thereby. Well, he also grew up in Britain, of course. He worked in the claims department there, got a very good working knowledge of coverage. In '73, he was the junior partner in a startup insurance brokering company in Coventry, UK. In 1975, Paul launched an insurance program for the Scientific Instruments Association, which led to various other programs for companies within the UK sector. But he's lived here in the United States since '85. He started a U.S. subsidiary of a UK company specializing in the insurance needs for U.S. subsidiaries of European parent companies. He returned to the UK, led a management buyout of the Coventry business, then came back in '92. And since 2001, Paul has been the insurance program manager for the Control Systems Integrators Association. The CSIA program now generates in excess of $5 million in annual premiums and is the only program designed exclusively for integrators. And now a new horizon for him. He has created this new ISA initiative entitled Insurance Solutions for the Automation Professional. Well, enough of this wind-up. Let's do the pitch. I'd like to talk to each of you panelists briefly, and maybe let's go around the horn. And let me just ask you how you have, in your current business and your current interaction with the automation world, how you typically find yourself interacting with the subject matter of risk, whether it's advising people on risk or dealing with it directly yourself. And let's start with Dennis Brandel, if you would, and give us an opening comment on that.
Sure, I'll be glad to. Like many ISA members who find themselves oftentimes in their career ending up working for themselves or else starting a business, that's the position that I was in. And in doing that, setting that up, you find out rather rapidly that there's all sorts of things and details that you have to take care of when you're dealing with companies, particularly in our case because we're dealing with manufacturing companies, and they tend to have concerns to make sure that people are doing the right job and that they are covered. But there's other things as well. So, just let me give you a real brief rundown of the sorts of things that I've gone through as you start to figure out what the level of risk is. The first one that came up when I started my business was I was running as an independent, 1099 sort of independent contractor and consultant. And I found rather quickly that what I had to do was to form an S Corp. Now you can form an S corporation or a C corporation or an LLC, and there's some different rules from all of those, but in terms of decreasing risk, what they tend to do is they remove the risk from you personally with your house and your money and all the things that you own and move it to a corporate risk. So, the corporation owns assets, and if anything does go wrong, if anybody does get sued, your personal information is your personal monies and properties are protected. So, in looking at risk, that was one thing that came out. Some of these companies, they said, okay, we really only want to deal with a company that is some sort of corporation, LLC or S corp. Another level of risk that you'll look at, and this is an interesting one, is don't forget about the taxes. When you do these things, you have to fill out federal 940s and 941s and quarterly reports and yearly reports, and state unemployment compensation and state quarterly reports and yearly reports and county reports. There's a big risk associated with that, with making a mistake. The IRS doesn't like you to make mistakes. The state taxes don't like you to make mistakes. So I find that reducing risk there often is to get an accountant at the very least to do the yearly taxes, simply because those are the ones where the major reviews show up. But the one that we're talking about here today is really insurance, and this shows up oftentimes in working, again, with companies, particularly if you have to work on site with some of these companies. And they will ask for you to have general liability insurance. Sometimes they may ask for automobile liability insurance in case you're driving to the job, in case you have an accident on the way to or from the job or in their parking lot. They may have an umbrella liability requirement as well, which says if there's any problems at all, you're covered. So that way they aren't paying for any issues associated with it. And then there's this technology errors and omissions, which will also show up as one of these insurances. Now, what I've found in talking with these companies is that the purchasing departments will come and tell you and basically say, we have a requirement that you carry $1 million or dollars, let's say, as an example, of general liability insurance, or $2 million of liability insurance, and maybe that you carry $2 million of technology errors and emissions insurance. Oftentimes this doesn't come from the technical people, but this really does come from the purchasing people who say that you need to have this. So one of the things that probably the least fun things to do in running your own business is basically to go out and try and find out how you get a lot of this stuff that you have to do, because we're talking about a couple of thousands of dollars for you to set it up, depending on if you're just by yourself or if you've got a couple employees in your company. The advantage of doing it though through your own company, setting up an LLC or S corp, is that it turns out it's significantly cheaper to get the errors and omissions by doing it as a corporation rather than as an individual. So a lot of the risk and discussions that people have had, that I've had with them, have tended to come from the purchasing agents and from the accountants who say, these are our corporate rules. Yes, I know you're a small company. I know you only got a handful of employees, but you still have to follow all these rules, and you still have to get all these insurance and other pieces in play. So
well, let me just ask you this, Dennis. I mean, true or false, if I, an integrator with one or two employees, or maybe just myself, can avoid those business people, the accountant types, who are requiring insurance certificates or requiring that I be a company, if I can just do it as an individual and avoid those people, and the technical people at the end user are dumb enough to hire me, I don't really need all that stuff, do I?
You probably, you really would. If you are doing this, you don't have any protection as an individual if you're doing some of this work. And if something goes wrong, and heaven forbid anything should go wrong, and I know we are all, competent engineers and competent workers, but mistakes do sometimes happen. If something does go wrong, you're in the unfortunate position of maybe getting sued, losing your house, losing your life savings, and all these others. So it is a risk thing. And it's also not really a good idea to try and hide under the radar. Many of these companies that I tend to deal with now, they have corporate accounting systems and a lot of things to make sure that nobody is getting paid without going through all the proper channels. So that's another level of risk. You don't really want to take that level of risk, because that will kind of poison you for doing any further work with that company.
Sure. It's just a matter of continuity and longevity in the business too, I suppose. Hey, let's go to Don Roberts of Exotech, and let me just ask you for any opening comments you may have as you intersect with this problem of risk facing automation providers and their customers.
Yeah, thanks, Mark, and thanks for having me on the panel here. It was kind of interesting to hear what Dennis said, particularly around the taxes, and I'll share a little story with you in a sec about that. So my exposure to a lot of these integrators and the risks that they're associated with is often through the CSIA audit. And as you know, Mark, the CSIA audit covers every aspect of the integrator's business. So it's great because I can travel around the world and talk to these different business owners and get some sense for how well they understand the risks involved in their business, and even the risks associated with doing systems integration projects. And I just want to leverage off of something that Dennis said relative to taxes. I recall a story. I was working with one integrator, and one of the questions that we looked at during the audit was just the process in which they went about filing their taxes and making sure that the information that was filed was correct. And this company had taken a pretty casual attitude towards that, and there really wasn't doing what was necessary to protect their business. And they scored pretty poorly on that part of the audit. And at the end of the audit, we had a conversation, and they were pretty upset with how brutally hard I was on them for this particular point. Turns out about 6 months later, IRS came in and audited them, and it cost them a fortune. And so I got a call saying, "Gee, Don, we know we're really hard on you, but thanks for at least giving us the heads up." So that's the sort of thing that I run up against is dealing with every aspect of their business and where some risks might come up. But in particular, I really enjoy the conversations around the risks associated with the systems integration projects.
Thank you, Don. Charlie Gifford, you've done just about every type of job in the integration automation field. As you give your opening comments, could you tell us the big picture items that strike you as first on the agenda?
Well, when I was an end user for half of my career, I basically did my own type of audit like Don does. I got, and the more experience I had, the more I looked at, the different aspects of the CSIA audit to basically look at my integrators and prime contractors and subcontractors to actually know, to see if they were cognizant of what they were doing. Because I was building Class 1, Div 1 manufacturing plants and starting them up and commissioning them. So the product was expensive. The people who were working in the plant, their life was at risk every day. And then the product we produced that we put out into the fleet was there to save lives. We produced ejection seats and many other life-saving devices. And so no matter what industry you're looking at, automation is risk management, because you're looking at whether you're producing a drug or having to maintain a safety level within the plant, or preserve the cost of manufacturing in that plant. It's all risk management that comes down to how well you're doing your automation systems and your manufacturing systems that control that risk. What I've found in my career is, as we went through companies basically getting rid of their engineering departments, they've lost the competency within their project management offices and within their business and their contract office to actually manage risk. So that's the situation that I see, is that within my clients today, is the majority of them have lost the competency to actually understand the risk that the automation, that understand how to manage risk within contracts. And so, so when the other thing to come off of some of what Dennis was saying is that you also have to take into consideration state laws, and there are state liability laws that play, and then you have to. And I work overseas a lot, and I have to take into account country laws. So for my one-man company, I spend upwards of $10,000 a year, basically between lawyers, insurance, and accounting just to protect myself.
And is that money well spent? I mean,
absolutely.
Of course, I'm self-interested in asking that as a lawyer who does automation law, but coming back to my original question, and let me just ask it this way: if I have no assets, in other words, if I believe in myself as an automation provider, and individually, okay, I've got a house, I've got maybe a boat, I've got a few bank accounts, but I haven't really hit it big yet. And I can't afford lawyers, and I can't to look at my contracts. I can't afford premiums to provide a couple of $1 million worth of insurance. Until I've established myself, do I really need anything in the way of additional protection like that?
Yeah, it's a cost of doing business, and if you're living beyond your means and not protecting yourself, you're not running a good business. So,
yeah.
I mean, and you know, a lot of people bootstrap, and you know, I've done it myself. So I've been there, done that, and gone through the worry. So, you know, you have to. There's a point where you mature to understanding, you know, the level of risk management you have to take on to run your business, and you know, when I worked for the Navy, we had a saying that you basically you're not a good project manager till you've made $1 million worth of mistakes. And lucky for me, I was working for the U.S. Navy, so and I never hurt anyone with the systems I put together, but I you know, made some mistakes that I caught during commissioning, and across, you know, 4 or 5 years, I wasted $1 million, and by the time 5 years later, I wasn't making those mistakes anymore. And so if you don't protect yourself, especially during that learning curve, and I don't think you're ever not learning in this business. It's the technology and the situations are constantly changing. So protection is, and risk management, contract management is all part of the job.
Is there a difference? I ask this to all of you. Is there a difference between risk identification and risk management? Anybody have any thoughts on that?
I do. This is Charlie. So I'm a PMP. So if you look at the Project Management Institute's methodology, one is the step to the next. And so the first thing you do as part of doing a project is you basically go out to the stakeholders, the environment, experts, subject matter experts, and you identify risk. And then you rank risk, and there are tools to do that. And you quantify the cost of whether it's, you know, what the impact is and what the frequency or opportunity of the risk occurring is, and you're going to rank those risks. That is a typical best practice in project management that, you know, by the Project Management Institute, and I believe by GAMP 5.0 from the ISPE.
Don Roberts.
I'll jump
go
in
ahead.
on that as well, Mark. The difference between risk identification and risk management in most integrators, multiple millions of dollars. I find it really fascinating the number of integrators that I've worked with that spend quite a bit of time identifying the risks, and they might even do that during the pre-sales process. And they may even be fortunate enough to pass that identified risk off to the project manager as the project manager receives that project. But then they don't take it to the next step, which is saying, okay, with these identified risks, how am I going to manage them? And to what Charlie was saying, how am I going to make sure that I keep an eye on the probability and the consequence? And if either one of those changes, then I need to reassess that risk. I've seen, you know, and I've had conversations with systems integrators that have said, you know, Don, we saw this, we took on this project, we identified a risk at the very beginning of the project, we took our eye off of that risk, and this particular one cost me $800,000. That one over there cost me $250,000, and I just hear it time and time again. So I'm pretty hard on them if they don't take that identified risk and move into the management phase of it.
Well, let's talk about that a little bit. What do you mean exactly, any of you, by the idea of managing risk? I mean, I understand identifying risk. I mean, you note, for instance, that this company tends to be, that you're dealing with, tends to be not all of that interest in cooperating. It expects you to solve the problem, but doesn't necessarily cooperate in providing a functional specification, or it doesn't have a history of participating in system testing of various types. How do you manage that risk? How do you go about it, or other risks of that type?
So this is Dennis.
Jim.
Let's start with Dennis, and then we'll go to Don.
Yeah. Maybe it's as a result of years of experience, which again a lot of the ISA people here probably have, is that a lot of this is education. A lot of this is pointing out to them what will happen if these things don't work. I've unfortunately also been in the situation where I've had to sit back and tell people, no, I'm not going to do this. I'm not going to support this. I'm not going to work on this because this is the wrong thing to do. You are not designing a system such that it, and in my case, I deal with a lot of biotech, pharmaceutical companies, and things like that. It's saying, no, this is not the right way to do this system. You will be putting your quality at risk. I know they do a lot of quality testing and everything else in that, but a lot of it is education. A lot of it is making them aware, because as Charlie said, it's unfortunate, but a lot of the engineering staff, a lot of the people who are in these companies nowadays have become much more project managers rather than engineers. They push off a lot of the technical expertise. And unfortunately, as people move up higher and higher into management where they can make some of these decisions, they tend to lose view of what's the important thing. And the important thing is the safety, the quality of the project, the product, the safety of the people, the safety of the customers, and all those other things.
Don, let's go to you, and then I'm going to have a question from the audience.
Yeah, a couple of things on that one, and to build a little bit on what Dennis was saying. I often ask the integrators, I said, how would you receive the situation where you needed to go in for a medical procedure and you went and talked to the doctor and he didn't talk to you about risk? And it causes them to then stop and think about it. And that's kind of the role that an integrator fills in an automation project, is that it's really the client is expecting them to have the thorough understanding of all of the risks that are going to be coming up, and have an open conversation with them about that. So I want to kind of set that there as being a major starting point for it. And the other thing, because I get in and I look at their methodologies and the way in which they're delivering the projects, one of the things that I see often, as I mentioned, is that they take the identified risk from the sales process and maybe they talk about it during the project kickoff. But their project status meetings don't have any slot in it for identifying risk. And it's a very simple thing to do, just to adjust your project status meeting agenda. Topic number 1, safety. Topic number 2, risk. And every single time you come into your project status meeting, you hit on those bullets. And when you do that, you'll very quickly develop the methodologies for managing risk.
Question from the audience. In the context of an automation project, who is mostly at risk? Is it the engineer who engineers the solution? Is it the resource that implements the solution? Or is it the customer who signs off on a factory or site acceptance test? I think I know the answer to that, but let me just ask Charlie what you think the answer is.
Well, the short answer, but I'd like to expand on it a little bit, is ultimately the whoever owns the contract is responsible. And what's happened in the last 5 years, especially post-recession, is, and I've seen this many times now, is that the contracts that and the way we're being asked to do these projects are at a fixed price with a standard set of T's and C's, with very long net 90 and even net 120 terms. And these are all, if you look at the types of contracts that are laid out by the Project Management Institute or ISPE, basically those risks are all on the seller, and so you end up, and this becomes very prohibitive, a high risk environment basically to do work, because many times we walk into a situation and because of lack of technical expertise, there's not good requirements or no requirements, and we're asked to give a fixed price. So, I end up in many early phases of projects, in order to control risk, basically giving away 20 to 50% of the hours that I put into it, and to get the next phase of work. So the skin in the game is a whole lot more skin in the game today for the seller, and so yes, there is. So if you're saying is the customer responsible at the factory acceptance test? Yes and no, because if it fails and you're on a net 120 contract, you're not getting paid for 6 months. It's really a tough environment, and you have to be very savvy these days. Savvy to the point you're willing to walk away.
Another question from the attendees. Please correct me if I'm wrong. Identification of the risk should be done before the risk happens, during the planning phase. Managing the risk should be done after the risk presumably is identified and happens. Would you all agree with that?
No.
Okay. Why?
Because you don't have requirements done. Until you've truly got your requirements done, and that's when you're actually identifying risk. You're doing variance analysis and waste stream analyses and different types of qualitative and quantitative analyses during the requirements gathering. You're going to identify the risk. And I can sit down with subject matter experts and put together a really nice list of possible risk, but until I've identified how that system is going to run within the business and who's going to run it, and really got the requirements nailed down, I don't know the risk, and I have to understand the players who are going to manage the risk before I put together a risk mitigation plan.
Yeah, and this is Dennis, and let me just add a little bit more to that. It's not only that, but it's something that you also have to do even further in the process, because once you've got the requirements given and you get a response back from the vendor, vendors don't automatically say yes to everything, or sometimes they say yes, but they may not actually be telling the truth. So you actually have to manage risk and not only manage the risk, identify the risks even further on in the project, once you've actually selected vendors and tools that you're going to use, because that's going to raise other new kinds of risks that we weren't really able to see at the earlier parts of the project.
Yeah, let me build a little bit on that too, because I think Charlie's point of a risk mitigation plan, you really can't do the risk mitigation plan until you're well into the project, and that's again part of an ongoing management process. But there are several steps before you get to that a risk review is done. It's pretty typical for an integrator to take a look at an opportunity and do a go, no-go risk assessment. And they're going to make that assessment based on a number of things. It's not going to be a rigorous assessment, but it could be based on the availability of staff or their skill set in that particular industry, working with the client in the past. And then once they get past the go, no-go decision, they get into a proposal phase, then I think they're going to do some additional risk assessment. And I really encourage that as being an interactive discussion with the client for lots of reasons, not the least of which, as Charlie was saying earlier, the client quite often doesn't have the skill set anymore to be able to understand what those risks are, and it's important to make them aware of it during the proposal phase of the project. Once you get into the project, though, that's when you absolutely have to have a risk mitigation plan and invest in that risk mitigation plan.
We have another question, it relates to waiver of subrogation. It's being asked for more and more. The questioner prefers to exclude it because it's a pain to add to the insurance certificate. His question is, what risk is involved in waiving subrogation? Why is it such a pain to get added to the insurance certificate, at least in his experience? Should it be a point of negotiation in the T's and C's so that we get it excluded? And I'll start by answering that question myself, since I'm often involved with waivers of subrogation. It is no problem for you to give a waiver of subrogation as long as you can get it from your insurance carrier. In many cases, the waiver of subrogation waivers that are being requested are inappropriate. What it means is that you're handicapping your insurance company so that it cannot pursue the ultimate wrongdoer after you are covered. So it's basically a decision to make your insurance more expensive. It sometimes makes and often does make sense with property insurance coverage. It does not make sense for workers' comp, commercial general liability, or automobile policies, at least in my experience. If anyone else on the panel has some comments on that, feel free to have it or let me know. Otherwise, we'll go on to the next question. So another question from an attendee is, we are a systems integration company of about 60 employees, but we also have about 10 to 15 individuals we work with, which we call independent contractors. What insurance do they need to carry, and what insurance do we need to carry for them? Now, for the answer to this one, I'd like to go to Paul Bernard, and the reason for that is I think this is an excellent opportunity, Paul, for you to introduce some of the key components, very briefly, of the new ISA initiative.
Okay, thank you, Mark. You can hear me, I hope.
We can.
Good afternoon to all the participants. As Mark mentioned when introducing me earlier, I have, for upwards of 40 years now, specialized in insurance programs for specific industries. The reason why I've done that is that I find that when you get into a specific industry and you investigate it, you find that there are specific hazards associated with that industry that don't apply to others. The CSIA program and also the ISA program liability policies, which is a combined professional errors and omissions policy and general liability policy, are designed and work very well for the automation industry. One very clear example of that is that most general liability and E&O policies that are out there have contractual liability exclusions. Our policy specifically includes breach of contract. And one of the dirty little secrets of automation is that if the contract is big enough, people will be tempted to sign it. And if they do that, we provide coverage for them, whereas typically that's not available. How much more detail do you want me to go into, Mark?
That's good, but let's go to what the questioner asked, which is he's got 60 employees,
yep.
And I presume that he's got his own insurance. He doesn't say, but I presume that he's got company insurance. He also has 10 to 15 people that are not employees, independent contractors. What does he need for those guys?
Well, one of the misunderstandings that are quite common by such subcontractors is that they are insured by the prime contractor's policy. In the United States, that is not the case. So, should the subcontractor make a mistake that results in a claim against the main integrated contractor, call them what you will, then the contractor will be protected, and the policy will indemnify them in the event that fault is found, but the subcontractor will not be. From the main contractor's perspective, this means that there will be a claim on their record for the next 5 years, which they will be paying the additional premiums that resulted from the loss. From the subcontractor's point of view, if they don't have insurance, their assets are at risk, and that's why one of the main driving force for the ISA program is to find a cost-effective way for such subs to buy the insurance. So my recommendation to, for example, members of CSIA is that they have a contract with each subcontractor, and that contract includes insurance requirements, and that they verify that they have such insurance by way of a certificate of insurance. Now, historically, this insurance for an individual subcontractor, say doing PLC programming or whatever, has been very expensive. And again, the ISA program is much more cost effective. I've seen individuals quoted up to $8,000 for general liability and professional E&O coverage. The ISA program can provide that coverage for between $1,600 and $2,000.
And this is Charlie. I just went through the quoting process, and the ISA program, and I have international professional liability and E&O, and the ISA program literally cut my cost in half, and for the exact same coverage. So
let me remind our thank you, Charlie. Let me remind our attendees that if you have a question, feel free to ask it via the Q&A box in the bottom right portion of your screen, not via the chat if possible. But let me just go on and ask, we talked about the identification of risk at the front end and then the management of it, and I think it was Charlie who said that often it's the case that the risk cannot be identified until deep into the project. But let me just ask, is there a go, no-go point that is somewhat short of into the project where you will walk away from a project or recommend that your advisees do so?
Yeah, I'll pick that one. I'm just done. I strongly recommend it. I think that every company does that to a certain extent, and I recommend that they document it a little bit more clearly. What are the go no go decision points that you're going to look at, and even beyond that, once you get into the proposal, looking at it again and saying, okay, what are the risks? So before you even sign a contract, there should be at least 2 risk reviews, and they're not rigorous. And in some cases, they might end up being just a gut feel, but they need to be done.
And what are some of the go, no-go things that you've seen? I mean, I certainly could give you a few. Contract provisions that are unacceptable would be one. Any others?
Yeah, contract provisions is one that you're going to see a little bit further down. So I kind of put it like this. You've got a go, no go on an opportunity. You've got a proposal where you're going to do another review of risks. Then you have a contract review, and there's going to be a set of risks there. So on the initial go, no go, what I typically see people looking at there is a technical review. You know, do we understand the technology? This is using a Rockwell PLC, and we're a Siemens house, so that doesn't make sense. So let's just pass on that. Another condition would be a resource availability. You know, we're totally strapped. We're going to not be able to deliver this on time. Another one is industry. So being able to identify whether or not you clearly and completely understand the requirements of that industry. And then I guess another big go-no-go decision is just a review of the client. And that can look in a number of different perspectives. One of them might be, doing Dun & Bradstreet on the clients is find out whether they're economically viable. Another one might be that we've worked with this client in the past, and they're just difficult to work with, and our margins are never what they are in any other projects. Or it may even be more specifically, we could do work at this client in general, do good work at this client, but this particular project manager at the client is problematic. So there's a lot of those kinds of go-no-go decisions. I guess the other one that I have seen used is more values-based. If there's a disconnect between the integrator's values and the values that the client has.
Very good. We have some more questions. One question is, does the ISA insurance plan allow for waiver of subrogation, which we just discussed, if the contract requires it and the client or end user won't alter the contract? Paul, I was just sort of leafing through the insurance policy in question. I have a copy of it here, and was not immediately able to determine that answer. You may not know either, but I thought I'd ask you to begin with.
No, that's fine. Right, waiver of subrogation on a general liability policy is no problem. There is no charge for the certificate. Waiver of subrogation for workers' compensation depends on which state you're dealing with. Some states have made such terms illegal, but if it's legal in that state, again, we can add waiver of waiver of subrogation on the workers' comp. The E&O, we cannot do it.
No, I would not think so. Well, thank you. You knew. The next question is, how do I go about getting a quote from ISA for insurance for my automation business? In addition to system integration work, my company provides instrument and electrical engineering services for capital plant project. Can the ISA insurance cover my entire business? In other words, the electrical engineering part as well.
The answer is yes. Dependent on the size of the organization, we can provide that under the ISA program, and if they are a larger organization, then we can provide it as part of the CSIA program.
Okay. And a follow-up question on the earlier question about independent contractors that do work for smaller integration companies to extend their entities, to extend their reach. Is there a way for their own company insurance to be extended to cover the individuals we work with that cannot afford to get their own insurance? In other words, can they extend their own policies, or is it best just to make it a requirement that they get their own?
Well, we have one CSIA member who quite regularly gets the subs they work with mandated by their customers, and the way that they are dealing with this now that the ISA program is available is directing the individuals to get insurance via the ISA program and then adjusting their hourly rate so that in effect the CSIA was paying the premium for them. As I discussed previously, you don't want a claim on your record caused by an uninsured sub. Really, it should just be the case that you don't work with uninsured subcontractors, period.
Yeah, I agree with that. It's just too much of a risk. I mean, if they're really badly needed, why not hire them? And if they're qualified enough, why not hire them, right?
Yep.
By the way, the size of the company where they were asking the question about whether you can cover the whole business, including the electrical engineering business, is 30 engineers and designers, and they do projects up to $10 million.
Not a problem. That's a typical CSIA member, and we can deal with them under the CSIA program, and if they have subs, then the subs we can deal with through the ISA program. Exactly what the ISA program was designed for.
And Paul, I don't mean to make you keep talking, but could you briefly say what the differences are between the ISA and CSIA E&O policies?
The only difference is that pollution is coverage is provided under the CSIA policy. It is not provided under the ISA policy.
Otherwise identical?
Otherwise, they're basically identical, yes.
All right, well, let's talk next about unreasonable contractual requirements. Do you push back on those? How aggressively how much leverage are you able to either push back, or if you're in the giving advice business, do you advise your customers or clients to advise back?
Is that for me?
I'm going to ask Dennis on that one.
Okay.
I think the pushback in my case has always been at the size of the company that I tend to be working with. The larger it is, the more firm they are in their policies, and the harder they do to make exceptions. I've found most of them to be reasonable, though. If you get to something where somebody is on the contract side of it is saying, we're going to own everything that you do for the next 2 years after you're done with us, sort of thing. They have been reasonable to say, hey, we don't, this is an unreasonable request. I'm sure that they've heard it from others. So you can do pushback. The smaller the company it is, the easier it is that I've found to push back on some of the very unreasonable requests when they're asking for more work than they are willing to pay for.
And more risk than they're willing to pay for as well.
Absolutely, yeah.
Oh, the one that I would identify as the number one on the hit parade for contract provisions to avoid is not really a contract provision, but the absence of a contract provision, and that is a limitation on liability. Let's face it, even though you may have insurance does not cover all risk that you may suffer in doing business as an integrator. For instance, if you were to put in a system that is badly programmed, that is not necessarily covered if you don't have an E&O policy, and in some circumstances might not even be covered by the E&O policy. So I think I would say that it's extraordinarily important to look for some sort of a cap on liability. It can be as simple as capping it at the total price of the contract or some multiple thereof, or it can be excluding things like lost profits and what lawyers call consequential damages, which is like the production losses that a facility might suffer, revenue losses, if your system does not work. What other risks are go, no-go sorts of items would the panel say?
I take a crack at that. This net 120 is that's really come out from a lot of companies, and their contract officers won't come off of it, has literally put the company at risk. And it, like, prior to this happening, I could put an A team together of subject matter experts that basically would be a low risk development or solution team. I can't put that team together anymore when I get net 120, because typically they're people like Dennis and I, or 4 or 5 other people coming together as a team to do a project. And if we're not, and when we do 2 months worth of work, deliver a phase, a requirements phase, for instance, and then we don't get paid for another 4 months after acceptance of that deliverable, we don't have lines of credit to do that. And the other thing that happens that I'm seeing is that there's a lot of turnover in these companies. So from the time a project starts to the time it ends, you might lose the person in the contract office and as your stakeholder. He might get another job or move, and how he views the requirements of the contract and the requirements of the project will influence how you get paid. So these are things that are causing, to me, a bit of a pandemic of failed projects, because you don't have a good relationship between the seller and the buyer.
Yeah, this is Dennis, and I want to just reiterate that. It's basically it breaks a level of trust that you would have. I mean, if you were to go to your car mechanic and say, fix my car and I will pay you 60 days later, 2 months later, you're not going to find a lot of good mechanics that are going to be able to, that are going to want to do that, and unfortunately a lot of the companies which used to go 30-day payments went to 45 days and 60 days, and I haven't seen a 120 yet, Charlie. I hope I never do, but that's not a job I'm going to take.
I've walked away from
and that
three
does
of them.
break a level of trust between the companies and the people working for it.
Yeah, I want to jump in here because there's a really important point that I see time and time again, and it's come up here a bit, and that is that a lot of integrators have gone out and they bought insurance, and the person or the organization that's insuring them doesn't necessarily understand the business. And so in many cases, when they sign up a contract, they have a waiver that they're no longer insured. And I think that's what I like about the CSIA program, is it's really designed for our business, and so it solves that problem. Another thing that a lot of integrators don't understand is the difference between what's covered by general liability and what's covered by E&O. So they have a significant portion of their business where they're providing advice to the customer, whether that's writing functional specs or doing design documents or whatever. And in reality, they don't have any insurance for that, and they don't really understand that. So I wanted to kind of just restate that because it's such a critical component and so poorly understood. The other thing that I find from a contract review, I always recommend that if you're getting into contract review and there's terms that you're either not familiar with or you think that these terms are going to be too onerous, then the first thing I do is send that to your insurance company. And your insurance company is going to tell you whether or not you're covered. And if you're not covered, ask them for a price for it. And once you've got that price, then you've got a negotiating point to go back to the client and say, okay, if you want those terms kept in the contract, this is how much it's going to cost you. And then another component to that is, let's say you've decided that, you're going to go ahead and accept that contract. The thing I like to do, and Mark, you and I've had some experience with this, is go back to the lawyer and say, okay, I want you to put this contract, the main bullets, in terms that my project manager can understand. So give me a 2 or 3 page summary that says, here are the legal risks that this contract introduces, and as a project manager, you should keep an eye on this, and this to avoid those risks. So I think those are important things to think about when you're looking at the contract. And then to build a little bit on the point that Charlie brought up about cash flow, worked with one integrator one time that took on fairly large projects but never ever did project cash flows, and they were in an environment where payment terms were 90 to 120 days. And when they actually took all of their projects, did project-based cash flows, and overlaid the project-based cash flows one on top of the other, they wouldn't have had a problem with the aggregate amount, but the timing of them all aligned to the point where they were going to exceed their line of credit by millions of dollars. And so sort of managing your contracts, and one of the risks, like the dollars and cents risks, make sure on large projects you're doing project cash flows to avoid the potential of the multiple projects overlapping.
And many system integrators lost into the recession, they lost half of their line of credits. So the line of credit's not available still for a lot of companies to even take on those kind of terms.
Yeah,
A couple of
to
bites.
that I always tell them every time you're talking to the bank, see if you can get your line of credit increased, whether you need it or not. Just keep asking.
Yep. A couple of bite-sized questions. I think you, Paul, had said that the CSIA program provides pollution liability coverage. The
Yep.
ISA program does not. When do you need that pollution liability coverage?
Well, that's a very good question.
I might have an answer for that myself, which is when you are dealing with systems that have that potential.
Well,
of
absolutely. We are seeing. We strongly advise all of our customers, insureds, to send their contracts, ideally before they sign them, to us for our review. We provide that service. There's no additional charge for it. And as was said earlier, we can point out to them what is and isn't insured, and if it isn't insured, then get a quotation to add that coverage. The one exception to that, I should mention, are liquidated damages. Liquidated damages are not insurable. And what we're now seeing is, very recently, there was I reviewed a contract where liquidated damages were restricted to $15,000. Well, fine. If you want to sign that contract, you can, understanding you're not insured for the $15,000. However, they then also stipulated a consequential loss insured without a limit. And as we dug into it further, we discovered that the prime contractor had put down to the sub who was employing us that if there was a delay in the project, the penalty was $200,000 per hour. Now we insure consequential damages up to the value of the job, but clearly $200,000 an hour could wipe out a very large business very quickly.
No question about it. Hey, Paul, are there links at isa.org to get further information about the insurance program?
Absolutely. There's two ways. There's a banner headline, one of the 5 or 6 that you can click on, or you can go into the membership benefits site and it's fully listed there. And the coverage is listed and provided quite clearly, plus the pricing. I would mention that for members, existing members of ISA, the whole process from clicking on the insurance icon to binding coverage and getting your policy electronically takes about 5 to 6 minutes. If you're not a member, you have to join, and that would add 2 or 3 more minutes to the process. But it's a very easy process, and it works, unlike Affordable Care.
Oh, Paul, some people might disagree with you on the Affordable Care question.
Well, no, coming from where I come from, I would disagree as well, but there we are.
All right. Well, let me just ask you this. We heard about the company that also had electrical engineering services, but let's expand that a bit. And let's say that this company not only has this, but has a full-service design and engineering EPC, construction management division. It does design build of industrial buildings.
Yep.
It does general construction, in-plant services. Can the ISA and CSIA programs, either of them, provide coverage for all of those? Well,
sounding like a lawyer, it depends.
Sure.
The reason why people sign up and buy the insurance products from CSIA and ISA is to pool risk with people in similar industries. So if you get a company that does 80% automation, 20% electrical engineering, or then we can accommodate that. But I had an inquiry recently from a $50 million a year electrical contractor who had a $500,000 integrator. Now, we can insure them separately, but not as part of the program, because we have to protect the integrity of the pool. So it just depends on the precise split of the business. Design build is not an issue. Electrical contracting, if we mean the wiring of the systems and that kind of stuff, that's not a problem. But if you're dealing with people with 50,000 volts going through instead of 240, 480, then we can insure them, and we'd be happy to, but not within the program.
Okay. What about doing business outside the country? I hate to monopolize your attention, Paul, but what if they do business not just in the United States but abroad?
Okay. Our policy is a global policy. It can protect your liabilities wherever they arise. You may be surprised to hear that we have an insured who currently has people working in Iraq and Libya, and our policy performs should they make a mistake in those countries. And indeed, if they are sued in Iraq, then our policy will defend them in Iraq. We have we have insureds with offices all around the world, and that's not an issue for us at all.
Let me just go around the horn and ask some of our participants, our panelists, how they work with their professional advisors. And here I'm talking about their insurance advisors, their lawyers, and their accountants. How do you use these people so that you're not running up a big bill constantly, but yet you're benefiting from their wisdom? Let's start with Dennis, if you don't mind.
Yeah, the way I look at this pretty much is time value of money. And I could spend a lot of time figuring out how to do all of my taxes and generating all these, or I can spend that time making money for the company. When I look at it and I say it's a whole lot easier to have somebody who knows what they're doing and spends the time to do it and can do it in a tenth the time that I can do it. And I just I set it up that way, and basically on my yearly budget, I know pretty much how much I'm going to be spending during the year on those professional services. I put it in and just make sure that I've got it covered when the time comes in. But as engineers, a lot of us think, yeah, I could do that. Yeah, just give me a spreadsheet. I'd be happy with this, to do some of the accounting, to do some of the taxes. And the insurance one's harder. The insurance one's harder. It really does take professionals and experts. There's things I wouldn't even try to do that way. So to a large extent, it's much better, I've found, to get the professionals who can do these things faster and can do them with a higher quality than I could even attempt to do.
Charlie?
Well, a lot of what Dennis said, as far as lawyers go, when I was working for the Navy, I was a certified contract officer's technical representative, and actually I find that I understand, and from my doing contracts for my whole career, I actually know more about writing contracts than a lot of my lawyers do. But depending on the state and the country, because I work out of the country a lot, I hire legal advice from other countries, and I have them review my templates and my contracts, and it's the cost of doing business. Accountants are even tougher because no one will commit to I find accountants are very non-committal, and so I end up having to do reading and research and draw my own accounting conclusions on how I'm going to approach the form of my business many times. As far as insurance go, I call Paul. I mean, it's you really have to engage your insurance professional and take his advice. There's just too much specialized knowledge there that I don't have the time to come up with. But the last thing is I've had work visas in 5 countries, and so it becomes, you really need professionals to help you with visas. Trying to do visas through websites is a bad idea, and I'll leave it at that.
Don, what would you say?
I'd say you can do your own appendectomy, but it's not advisable.
I've seen that on TV. I mean, it's possible.
Yeah, it's crazy. I want my project managers, or my clients' project managers, work on adding value to their customers, not spending time becoming lawyers. And a lawyer's hourly rate might be expensive, but when you look at the overall risk that you minimize, it just makes perfect sense. The other thing is on things like insurance. I mean, things change. 5 years ago, cybersecurity was not much of an issue. It's a pretty big issue today. And so having my project managers and people like that trying to stay on top of all that, it doesn't make any sense at all. So I like to defer that off to the professionals, the same way as I want my client's client to defer to the systems integrators to be the professionals that doing systems integration business.
And I think it's also true that most accountants, lawyers, and insurance professionals, as a lawyer, I certainly operate this way, are willing to tailor their services for the comfort level for fees that each customer has. If they like to review their own contracts but would like to save particular troublesome or thorny clauses for review by a professional, that's certainly taking a risk, but it as long as they know what the risk is, I think that the professionals are willing to do that.
That's a good point, Mark. And to add to that, one of the things that I try to advise my clients on is when you're dealing with these professionals, make sure that the professionals that you're dealing with understand your business. That's a great thing about you, Mark, and Paul, is that you guys have invested in this industry, so you understand what the risks are and the exposures that we have. Similarly, on the accounting side, if your accountant doesn't understand percentage completion revenue recognition, you probably got the wrong accountant. So as you start to move some of that work off to these professionals, make sure that the professional knows your business.
Mark, just briefly, both the CSIA and the ISA liability policies include cyber.
I put that in for you.
Thank you.
Nice to see cooperation going on among our panelists. Let me just point out to our audience that we're going to continue this discussion to the halfway point of the hour, 1:30 Eastern. And if you have any questions that you would like to ask any of these knowledgeable people, please type them in the Q&A box. Nobody's name is being mentioned, so you're not going to go live with all of that. In the meantime, I will continue to ask some questions. If you would each briefly discuss this new ISA Insurance for Automation Professionals initiative and tell me how you see this assisting ISA membership. And let me just start by asking the group on that subject matter why it's taken so long for this particular program to be offered and why it's being offered now. Paul, do you have a sense on that?
Yeah, I have been attempting to put such a program together for several years, a bit of understatement there, and the problem has been to find an insurance carrier who A, understands the automation business and B, was prepared to implement a web-enabled system whereby an affordable product could be mass marketed. The people that we partner with, this is a Lloyd's policy in London, have in fact, their name is CFC. They were originally a .com company, Click for Coverage, and they specialize in this, and they have upwards of 100 web-enabled programs around the world. So it took so long because I didn't find the people in London quick enough. Why is now the best time? The best time has been. Sorry.
No, I'm sorry. I was just going to say, what's the intended audience of this program? Are we talking about companies, or is it individuals, or both?
Individuals and small companies as far as the ISA program. It really is tailored and was initially designed for individuals, but we can cater for up to a 5-person business within the program, and above that we can cater for them as part of the CSIA program.
Okay. What about the risk of that is represented by technology used in the project, particularly if it is recently released from a vendor with minimal support? Do you see that as a risk facing our attendees? Let me start with you, Charlie. The risk of I'm talking about the risk of a beta state software product, if that is a significant risk.
Well, and that's why I say automation is risk management, is that when the tools we have to use, and this sort of goes to Paul's endeavor as well, working with a large insurance company, trying to ensure a sort of a niche market. People. So why doesn't Microsoft sell automation software? Because it doesn't sell millions of licenses. It sells a few thousand licenses from company to company. They have partners like Rockwell, GE, Siemens, all the others, but that build solutions on there. But when you look at any automation software or manufacturing systems software, whether it be MES or EAM or LIMS or anything, those companies, don't sell enough licenses to put out a rock solid product all the time. So it comes to us, the consultant and integrator, to take a beta tool. In many cases, it's been brought to market, and we take that risk. And with these fixed price net 90, net 120 contracts, that's part of our risk. Is that we have to put together a stable, high reliability, high availability solution using basically tools that are not QA'd by a million people or even 1,000 people, but are QA'd by 10 to 20 people in a short amount of time. And so we become the QA people for many of our software partners. That's the bane of our existence, if you will.
Other thoughts?
Yeah, Mark, if I could jump in there on that one. One of the challenges that a lot of integrators are faced with is you have a sales force out there from the vendor, and the sales force is out talking to the end users and telling them about all of these brand new features that are available in the latest and greatest of their products. And the end users then start to include that into their concepts and their requirements. The integrator then gets this requirements document that has a product that may be released, or maybe it will be released at some point during the project, and that's what the client wants to work with. And this is where I think the integrators need to step up to the plate, because they really should be having a conversation with the client and say, do you realize the risks that you're introducing to this project? Because a lot of times the clients, as we mentioned earlier on, don't have any concept of what that risk is. And then the second component of it is that the integrators themselves are challenged because they're populated with engineers who love to solve problems. And so given a product that may or may not be 100% complete, their engineers are going to struggle to try and make that thing work. And I'm surprised at how slow integrators are to embrace the vendor. If it's a brand new product coming from the vendor, I would put on my project a certain amount of money and time allocation to have the vendor engaged in the product as it starts to come online.
And that's what I was going to add
as well. That way defers the risk right back to the vendor.
I recommend when I teach my workshops and with my clients that they pay for a senior architect, look at his resume before you sign the contract and say, I want this person to help. And I call that guy my insurance policy, actually, my QA policy. And it's not part of the maintenance of contract. It's part of the licensing. It's a separate contract. And why that's important is where SIs lose money is that they have to go through these tiered support groups, tiered support lines that go tier 1, tier 2, tier 3, and it might take them 2 or 3 days to solve, a freaking memory leak problem or something. And at the end of the day, that's lost profit in the project. Where if they have paid for that architect, he can you pass it off to him, and he goes and gets you an answer hopefully in less than a day.
A few more questions about the policy specifics. First of all, Paul, is the ISA insurance program year to year? The questioner's current professional liability insurance requires a 3-year contract.
Okay. What I've seen in contracts is not the 3-year contract, a 3-year policy is required, but an undertaking that the policy will be renewed for 3 years. I would have to ask the question as to whether we can issue a 3-year policy. Theoretically, I don't see a reason why not. But standard contractual requirement, again, that I've seen is that it be renewed for 3 years, the coverage remain in place.
So they, if they canceled after the first year, they would be in breach of the policy agreement?
They would be in breach of the contract.
Okay, so I guess the questioner was wondering if it's a year to year, and the answer is no, it's not. Another question is, what impact upon the policy, either to the company that purchases it or the individual, would it be if a particular person is under a working visa in the United States? They're from another country. Any implications there, Paul?
Well, if they're working as an employee, none whatsoever.
Okay. And a questioner asked, is the fact that there is professional engineers liability, an E&O component inside of the oh, I'm sorry, I'm misunderstanding the question. If there are professional engineers within the company that is purchasing the policy, does it reduce the cost?
The ISA program, if you are a certified member of ISA, you get a 10% discount. For as far as CSIA is concerned, it certainly has an impact on the underwriting and the view when it comes to charging the premiums. It is one of the factors that I take into account in those circumstances.
Okay, so the answer is yes, it does help.
It does.
At least potentially.
Yes, it does.
All right. we're in the last 6 minutes of our broadcast here, so let me just ask each of you to sum up, if you would, the major points that you would like our audience to take away from this session. If you have not made the point already, or even if you have made the point already, drive it home now and do so forcefully. Let's go around the room, and I'm going to call first upon Charlie Gifford of 21st Century Manufacturing Solutions. First of all, thank you for participating today, Charlie. To give your summing up, if you would.
I have been waiting for this to happen, for Paul to pull this off, and he's also working on some other policies. 70% of the automation professionals in the U.S. are reaching retirement age, and so they will be wanting to work for themselves as they're in retirement, and so we need to put together a good business plan and structure for them. I think the work that ISA, CSIA, and Paul are doing are a huge first step in that direction, and we can continue to help people understand. There were a lot of pieces around this that about how to run the business and structure the business, and I think continuing that discussion and will help people, and this is a great first step.
Don Roberts.
Yeah, thanks again for having me on here. A couple of things. One of them is, if you have insurance and it's not through something that has been reviewed by the likes of Paul, you probably want to check to make sure that you actually are insured when you're signing up to contracts, because in most cases you are not. Understand the concept of E&O insurance and the difference between E&O insurance and general liability, and particularly if you're not using a CSIA insurance program. And the last point that I want to make really strongly is, in your methodology, in your project methodology, the way in which you start right from the opportunity all the way through the final delivery, put in place mechanisms to identify and manage risk, and particular focus on managing risk as you go through the project.
Dennis, thank you, Don, for participating. Very good comments. And Dennis, thanks to you as well. And if you would give your summing up, if you would.
Okay, my summing up is pretty straightforward. I concur in absolutely with everything that Charlie has said. We are reaching an age where more and more people in the professional areas, especially in the automation areas, are going to be independents because the companies can't afford to keep them, the end-user companies. Systems like what ISA is setting in place with this are going to be absolutely essential for these people and for all of us who are listening into it, because it's going to allow us to work with professionals. We don't have to do things ourselves. Remember, we're being hired because we have knowledge and very specialized knowledge in very specialized areas. Well, we also need to apply that same model to the accountants and to the insurance people, particularly to the insurance people, because that is an area where you definitely need to have the expertise. So use people. Don't try and do everything yourself. Make sure you are using the experts, and I am absolutely fantastically happy that ISA is doing this and going to be providing this as a service to their members.
Thank you very much, Dennis Brandel, President of BR&L Consulting, Don Roberts, President of Exotech, LLC, Charlie Gifford, thank you, 21st Century Manufacturing Solutions, and Paul Bernard, Insurance Program Manager for the CSIA and for the new ISA initiative. Thank you to all four of you for participating in today's webinar entitled Risk Management and Risk Transfer, Important Considerations. All of you who have attended will receive an email from Stacy with the ISA within the next few days with a direct link to a recorded version of this session. I think the consensus message here is giving attention to risk and letting the professionals who deal with this area, particularly insurance professionals, help you manage that risk. Thanks all for attending, and thanks to the ISA and CSIA for sponsoring today's discussion. Good afternoon or good morning, wherever you may be, and we'll talk to you later.
Thanks a lot, Mark.
Thank you.
Thank you.